It's 8 o'clock in the morning, and I wanted to start a new series called "How to Trade Like a Pro." A lot of people don't teach our boys how to trade, from the mindset, the strategy, the time to trade, and all of that stuff. So I'm going to be making this series on how to trade like a pro. You feel me? I'm gonna be giving my strategy out. This actually the first video for today. It's a strategy because the main thing you need to be a professional trader is a decent strategy. So I'm going to be showing y'all my strategy. If you want to use my strategy, you clicked on the video, so more than likely you want to use it. But you don't have to if you don't want to. Just before you get into trading and actually start trying to take it serious, you're not going to be able to take it serious if you don't have a trading strategy, right? If you don't have a way that you can trade daily, you feel me? Like what's the word I'm looking for? Execute something on the market every single day. You will not be a good trader, right? And before we get into the strategy, I do want to talk about the psychology of having a decent strategy. So make sure y'all boys listen up, because a strategy is nothing if you do not execute it well enough, right? And what I mean by that is every day, if you are getting on the charts, you have one strat. You don't want to deter from that strategy at all, especially if you have back tested it, forward tested it, and it's proven to work. If it's a proven to work strategy and you're constantly using it, and it's constantly showing you that it can make you profitable, do not deter from that. Stick with that daily. You don't need to be jump hopping on the porch and doing all this other stuff trying to look cool, bottom tick, top tick. You don't have to do all that. Stick with what you know, improve on what you know, and use what you know to make you money. That's with any type of business at all. It's not just with trading. If you're trying to run a business, you have to work with what you have, right? So if you have a strategy and it's proven to you to work, if you heard this saying, if it's broke, don't fix it, it's true. If it mean no, if it's not broke, don't fix it. Yeah, I said if it's broke, don't fix it. If it's not broke, don't fix it. That's true, because if something is not broke, why are you trying to change it, right? And that's what a lot of people do. People go get a strategy, it works for like a week, then they lose it. They lose like 2 days, and now they need a new strategy. They strategy hopping. Why, right? Stick to what you already know. Stick to what is working for you, and I promise you, you will have a way easier time day trading. Simple. Way easier time day trading than you would if you were just strategy hopping, because you can't stick to one thing, and that's why you're not blowing. I mean, not passing counts and stuff like that, because you can't stick to one strategy. So I'm going to be giving y'all my strategy for today, how to trade like a pro. My strategy is actually based off professionals, right? How professionals trade using order flow, volume profile, etc., etc. So make sure y'all boys stay tuned. Well, we finna get into it right now. I'm saying stay tuned. Let's go ahead and hop into it. I mean, do that. Bring this thing down right here. Put you over here. All right, let's get into it. If y'all boys are new to the channel, y'all don't know, y'all probably don't know that I trade volume profile, right? That is the main thing I trade. I used to trade ICT. I used to trade ICT, but ICT just wasn't. It's not the best to me, in my opinion. It's a lot of good things that I still use from ICT, like fair value gaps and all that. But we also had this stuff in order flow, which I kind of trade order flow mixed with ICT. But ICT is just really discretionary, right? So it only works when you give it context. It's like you have to. It's hindsight almost, right? Like, of course, that's why I say the only thing that really works is fair value gaps, because imbalances have always been a thing inside of the market. But and SMTs are good as well. But like other stuff like order blocks, you can always see an order block, and it probably like 70, I say like 60% of the time it doesn't work if it doesn't have the right context. And that's what a lot of people don't teach you guys, is context. So let's go over how to understand the context of the market first. Now, when I say context, I'm really just talking about the trend, right? What the market just did, what it's doing, and what it's trying to do, right? So the trend of this market, this was taken on, this was yesterday, which was Friday. Um, we ended up catching sales on Nasdaq and gold. Yeah, I still got the gold trade. Kitchen sales on, and my gold really uses my strategy to a T, so we're gonna come back to that. But let's just talk about understanding the narrative of the market, right? So if you get on the market, and let's just say we go back to New York Open like this, You get on the market, you see that we just instantly had a sell off, right? Just a huge dump down to the downside. Your mindset shouldn't be like, oh, okay, I need to look for buys, right? I want to catch buys today. No, that is not. No, if we have a bunch of, selling pressure inside of the market, more than likely, what are we going to continue doing? Selling. I don't know why, and this was a bad thing for me too. I will always try to reverse it, and I really feel like it was ICT fault. I'm not the person ICT, but the strategy, how people presented ICT. ICT was used like to seem like a reversal type thing. No, the market is going to more than likely continue the trend. Remember the saying, the trend is your friend. So understand the trend first. We can see that we are holding bearish price action. That's another thing. If we go to the higher time frame, go to the higher time frame. On the higher time frame, we can see that we did start climbing back up, right? Which this is normal. This is called a pullback, right? That's 500 points. So that's a good, like, if you were able to catch these buys, which I did catch these buys this night, I'm pretty sure. I caught these buys right here. No, I caught these buys right here. Yeah, if you are able to catch these buys, this is pretty good. You know, you made some decent money here. That is, I applaud you. But on the higher time frame, this is just a pullback, right? So on the lower time frame, and this is where a lot of people get stuck at. On the lower time frame, a lot of people look at this and they're like, "Oh, the market's shifting to the upside. I need to enter in for buys," and they'll try to hold all the way to the top of this range. Like, let's just say they get in here, they buy the dip, and they try to hold all the way up here, and we don't have enough buying pressure in the market in order for us to get up there. Why? Because we just had sales, right? So we know once we get to around, at least around in this area over here, if we see all of this selling pressure, because this is where sellers stepped in at before, and they just completely dominated the market. That's what I mean by understanding context. You got to look at the market and see what just happened, right? Over here, we can see to the side that sellers stepped in this market and were completely dominating. How we know they were completely dominating? We don't see not one green candle, and all of these red candles that we are getting are pretty large candlesticks, right? This tells me that there was a lot of selling pressure around in this area, right? So we don't want to hold our trade till when we get to this area. Why? Because we're going to get chopped out, right? And that's exactly what happened. If we look over here to the side, we can see we start to chop when we get to this area, right? So as soon as we start getting over here, as soon as we get over here, what do we start doing? Chopping, right? Chopping. The market starts chopping. It doesn't know what it wants to do, to be honest. It doesn't know if it wants to continue going up or to continue dropping down. And that's the main thing. You want to try to be build. It's building a picture right now. What is the market trying to do? And that's why you want to wait, right? Wait for things to happen. Stop trying to predict and wait for a reaction. So once we get to these highs, and we start chopping like this, we see a drop. Okay, when we see this drop, right, we already know we are in a downtrend, right? Or we have our sales are presenting themselves. When we see a drop, let's see. Okay, is this a real drop? And we trying to go back to yesterday's lows, or are we just dropping down and to continue up a little bit later, so we could maybe go up to into that range? And how you know that, notice that is if we're breaking structure, right? If we are going through and breaking structure like this, we breaking down, okay, we as soon as we come through, sweep these lows, we come back up, we respect this selling price action right here, right? If we go to the 15-minute, we respect this selling price action that we have right here. This is called institutional order flow, when we're respecting bearish price action or bullish price action. When we see stuff like that, like right here, when we had this, we came through, swept these lows, and we started pushing back up. I guarantee you a lot of people enter in for buys because it seemed like we were holding bullish price action, which we did, but sellers just wanted to push the market down. We still had this selling price action up here, right? So institutional order flow tells us, okay, if we're holding this area right here, right, this 30-minute fair value gap, because that's what it is, we're tapping into this 30-minute fair value gap and holding it, and we come through and break through this low again right here, more than likely, what are we finna do next? Continue lower, right? That's the main thing. People don't understand, okay, if order flow is being held and it's showing us that sales are in still, we should be looking for sales. We know, okay, we just came into this 30-minute fair value gap right here. We started chopping, we broke through it, and we came through and broke through structure right now. Now we're retracing back into this range, right? And this is the main thing right here. Typically, when you're around like in this area, and I'm gonna delete this box so you don't get confused. And I know I'm talking about a lot, but you have to understand these things in order for a strategy to work, right? And I feel like a lot of y'all are lacking context. So I'm trying to present context to you. It's a lot deeper than this, but I'm gonna try to explain what I can in this video. But when you see stuff like this inside of the market where you're just choppy inside of a range, like this is a range, right? We're not really doing anything. Like we're going up and we're going down. We're going up. Yes, you can catch some decent trades. Yes, you can catch some good trades and stuff like that. But you don't want to typically take a trade in the middle of the range. And that's what a lot of y'all do because y'all don't zoom out the higher time frame, right? If we look on the lower time frame, like right now, if we look on the lower time frame, this looks like a just strictly a uptrend, right? You know what I'm saying? This is like an uptrend. We just had this break of structure right here, so we might be getting sales next. But it's just a lot of stuff going on, right? It's a lot of stuff going on. We got a downtrend, now we're going up. We seem to be holding bullish price action. There's a lot of stuff going on. Go on the higher time frame. What the higher time frame looks like. Higher time frame looks like noise, right? You don't want to be trading in noise, right? Like I said though, so you don't get stuck in this noise is understand, look to the level, look what just happened. Like I just told you, we had a downtrend tapped into this 30-minute Fibonacci gap. Now we're going down, right? Now we just want to see, okay, do we still hold this bearish price action? Do bears step back in and break us out of that range? And that is where you're going to be looking to enter at, right? You're going to be looking to enter out of the breakout of this range, right? So we come through. Yesterday was super choppy, so I don't want to use just to see like this was a lot of chop, right? This was a lot of chop, but yeah, yesterday was a lot of chop, and I think that was it. So I'm going to show y'all gold because gold was a lot cleaner, and this was a lot of chop. You typically don't want to trade these days like this. So yeah, let's go to gold, and I'm going to show y'all my strategy and how I use my strat, right? Because I've been talking for 10 minutes and haven't went over the strategy. So let's go ahead and talk about it. So boom, as y'all boys can see, I probably like, what is this screen? What is this like little weird thingy right here on your screen? This is called the volume profile tool. And what I use is called the fixed range volume profile. This allows me to select the area and pick out which area I want to see the volume in, right? So usually I trade the overnight volume, right? So I look at like past like Asia and London session, and I'm gonna show y'all my indicators just so y'all can be on the same track as me. This is market profile by Joshua. And then I also use the session volume profile. You could just go to indicators, type in SVP, and it's gonna pull this up right here. It should be the first two. It don't really matter. For some reason it's not. It's because I'm on a 30-minute time frame. Yeah, some reason it's not. Is it because we on the new gold contract? Yeah, it's because we're on the new gold contract. But this is what the session volume profile will look like. And yeah, it looks a lot like super confusing, but I'm going to break this stuff down to y'all real quick. And since gold session volume profile isn't working, I'm gonna just show y'all this right now. As y'all can see, the reason I don't really like this one is it doesn't go all the way back. You feel me? Volume areas, row sessions, and I don't know if I can change it. Yeah, I don't think I can change it either. Like I can show you all sessions, pre-market. You could change. I actually didn't know you can change the sessions right there. So yeah, and you can put a custom session in just so you can set everything up, which I might do. But only thing I don't like about this one is, look, it stops right here. So you can't go back in the past. So you have to use the fixed range volume profile tool and drag out everything yourself for the other stuff like this, right? Now I'm just showing you what volume profile looks like so you don't get confused. Now let's talk about what volume actually is, right? And why I trade it. So volume is where a number of transactions are going, right? So as we know, the market is just it's an auction, right? And that's what pros trade is. They trade the auction of the market, right? That's why I made a video about this, trading like a pro, because my strategy kind of is from the pros, you know what I'm saying? But the volume profile is a bunch of transactions going in and out the market, right? And this is what creates volume, right? So like I said, the market is an auction, right? We got a bunch of sellers, buyers going, I want to buy here, I want to sell here, I want to buy here, and that creates volume in the market. And so once we have a bunch of volume or a bunch of buyers and sellers, that increases our volume, right? And when we have like imbalances like this tells us in this area right here, and you can see on the volume, we had a low amount of volume. Now that doesn't make sense. Okay, if sellers were heavy here and we just push the market down, we should have more volume. No, this just tells me that sellers were just completely dominating once we got to this area, right? So once we come around in this area where the volume is weak, more than likely we will see a lot of rejections in this area, right? And we could tell just like this, right? So we have these right here, and we usually come to the top of this mountain peak. So we're gonna do that mountain peak. As you can see, we got a bottom tick right here. As you can see, we could drag this all the way over here, and you can see this level is being held, right? And now what I usually do is how I find my levels like these is I do above so you see where there's no volume at right here. This tells me this is where previous imbalances was, so you can see we ended up pushing up heavy. But you want to do the mountain peaks before those, right? Like the mountain peaks before those little imbalances, right? And that'll help you find some good levels that you can use, right? That's just a little tip if you are struggling with finding levels and stuff like that. But yeah, let's keep on going, talking about volume. Yeah, so volume is inside of the market, right? This is what's going on inside of the market, right? It's giving us like a little, what's the name, telling us we know around in this area. Well, no, we actually know around in this area over here, right here is where we have a bunch of volume at. And as you can see, if we look over on the candlestick charts, and I'm gonna turn this off real quick. If you look on the candlestick charts, you can see there's a bunch of transactions. This is where we actually were the most heaviest at, right? And that's why you don't want to trade when there is a bunch of volume because that's where you're going to get chopped out. It's not going to have a clear distinction inside of the market. You don't know what's going on, right? You don't understand what the market's trying to do. So you typically want to trade when we get to the top of these little mountain peaks over here, right? So when we get to these little mountain peaks, as you can see, we got a mountain peak over here, this little mountain peak over here, and so y'all don't get confused, this is, dang, this is going to be a little confusing, but it seems hindsight. I don't want y'all to get confused, but when we get to this little mountain peak over here, you can see we come over here, and then we instantly start dumping down. We got another mountain peak right here, come to that mountain peak, and we instantly start dumping down, right? So that's what I want y'all to understand. You don't want to be inside of the trade, like inside of this volume, but you want to typically look at the volume area high and the volume area low, and that is what I trade. I know it took me 17 minutes to explain that, but you have to understand that stuff, in my opinion, to actually be to understand my trading strategy. So now that we got that at the way, let's go back to the actual trades that we took yesterday on gold. If my gold trade can pop up, where did my gold trade go? I called sales, as y'all seen earlier. So like I said, what I typically do is get the fixed range volume profile tool and drag it from Asia session to London session, right? And the reason I do this is because more than likely, if we're trading that New York session, we're going to tap back into overnight range, right? More than likely, right? If we don't extend over it in the London session, like the London session, some days, I'll try to find an example. I try to some days like this, which we still ended up coming back into the range. But days like this where London just extends away from Asia, certain days like that, those are rare, where we won't probably tap back into the range, or days like this right here, where we won't probably tap back into the range. Those days are rare, but more than likely, we're going to come back and tap into overnight sessions range. I did not mean to move that. I don't know where I had it. We're going to tap back into overnight sessions range. And the reason that is important is because we can use those volume area highs, which are these black lines right here, this volume area high, this volume area low, and the point of control is levels, right? That's the main thing. That's where I find my levels. That's how y'all can see me when I post vids of me bottom and top ticking. It usually be with these levels, right? And I don't typically try to do the bottom and top tick, but with this strategy, it allows you to have such a low RR and high win rate, right? So you can have a higher a lower risk to reward. You feel me? You don't have to risk a lot, but you can still make a lot. So yeah, because you are getting in or like getting in or out at the top of ranges, right? And I'm gonna talk about ranges later on, in another video. But this just so you understand. So with gold, I seen that we tapped back into. We are already bearish, right? We already sold. With this was Wednesday, we sold. We continued to sell. Thursday we sold. We continued to sell, and then Friday we sold and continued to sell off. So we already see we're in the downtrend, right? That tells me, okay, I want to be looking for sales. Now I just need to figure out where we will more than likely reject off of, right? So on the like 30-minute time frame, we can see we almost came to this point of control. I think on the 3-minute time frame, we did come to the point of control. Oh no, we didn't. We didn't. My bad for lying. But yeah, on the 30-minute, we almost come to the point of control. But I actually, like, say I can't find the level, right? Say my level, the overnight session just isn't working. I used like previous days, right? So we got Asia session. I mean, London, yeah, Asia session all the way to New York session. This one don't really work, and I just started dragging my volume profile tool out, right? Till I find like the range that we are in, because that sometimes we be in a whole nother day's range, right? You know what I'm saying? So I can see that once we came to this range over here, we instantly started falling off and stuff like that. So yeah, but I seen that we came to the point of control over here. We came to this point of control. Once we came to the point of control, we ended up selling off and dumping below these lows right here, right? And this is where I entered once we got the candle closure below these lows, because that told me, oh yeah, we're more than likely we're going down, right? More than likely we're going down. And I seen that we were chopped. I didn't take these trades because we were wicking right here. We were wicking below these lows, so I didn't enter in right here. But once we got below this low right here, right? Once we ended up getting below, or you could have entered in right here, whatever works. Whenever we get closed below that low, that's where I ended up entering and ended up taking sales, right? Because right now we were just stuck in chop. But I use these levels as reference, right? Okay, if we more than likely we're going to reject off of them. And let me show you another example. What's a good example? Yeah, here. I took sales this day too. I was actually upset. I got this recorded of me taking sales. As you can see, we come straight to the point of control right here. And y'all gonna see like these levels are top tier, right? Once you get good at it, like I said, you don't have to just use the overnight session. You can go to previous days and see the range that we're in. And as you get, like, we go to NASDAQ. On this day right here, we ended up going up. We were in an uptrend. We came down, dumped. We actually did tap back into overnight's range, but overnight range lined up with this volume area high, right? So this volume area high ended up getting tapped. It was a bottom tick. It get tapped, and this just gives me more context. Oh, okay, I see this. This is a good level, right? See, in this, when you have a good level like this, these levels can be used again. Because once we get back over here, we can see that this level ended up getting used again, right? I think, yeah, that's it. That's just what I wanted to explain. Even this level right here, this volume area high right here, this level ended up getting used again. I'm gonna turn off the indicator so y'all can see. You can see it got tapped. We broke through it. We tapped it again. It tapped it again right here using sales. But mind you, you got to peep every time that we used it. It had a reasoning, right? So the reason this level worked so strongly is because it was this 30-minute fair value gap right here, right? It wouldn't work this strongly if nothing was here, if selling pressure wasn't here. Like sales wouldn't work right here if selling pressure wasn't right there. So make that make sense. Like, don't forget the context. Don't just start using these levels because, oh, Sham is telling you, okay, yeah, these levels work. No, just make sure it has context. Every trade I took had context. So let's go back to this trade over here. All right. So I ended up taking this when this was Thursday. I took this trade Thursday, right? I took sales, right? I ended up catching sales. And as we can see, if we just delete this right here, this black line, just remember this is the point of control right here, right? And we know it's the point of control because we can see this is where the most candles were around in this area. So we know that's the point of control. We can see that this is the point of control. We ended up coming up here, almost taking out the previous day high. And what did we do? Start breaking down and breaking through structure, right? We started showing selling pressure. And we didn't even just have a break structure right there. We had it like right here, right? started breaking through structure, running through all of this previous bullish price action. And another major thing is we had this gap right here. Right now, you won't always see these gaps right inside of the market. That's cool, but that's just a good way. That's where I'm building my context at. So some days you might not have these gaps. You just want to be being able to. You want to be able to read price action. I need to drink some water. So so yeah, once I seen that, I instantly knew, okay, more than likely we're going to try to fill this gap since sellers are already trying to step in, right? More than likely we want to try to fill this gap. So I'm going to go to the 3-minute. Now in 3 minutes, same thing. We ended up, as you can see, that point of control level was a bottom tick. We bottom tick. I don't enter off of the point of control taps no more. I used to, and that just it's extremely risky, right? You don't want to do that. Now what I do, my entry model, what I typically do is wait for us to break through these lows right here, right? So once we broke through that low, I usually and this was, I called another trade right here as well. I ended up catching, let me show you. So my first trade was right here, where we broke through these lows, right? We broke through these lows with aggression, and then we started pushing back down. And so I entered like around here, right? Stops going above this high. Stops going above this high, and Asia lows was my trade. This was my first trade, right? This was the first trade I took. Why? We just reacted off the point of control, which was, we are already in the downtrend, right? You can see it clearly on the higher time frame. And what did we just do? Take out these equal lows over here, which I'm gonna talk about liquidity in another video and how important it is. But we took out these equal highs over here. We took out these equal highs over here. Then we started breaking down from the selling pressure, right? This was a bunch of selling pressure. Remember the context of the at the beginning of the video. This is a bunch of selling pressure right here. Started dumping down. Took out these lows, tapped into the point of control that was over here. Remember that point of control is a good level, especially you want it. You can only really use it if it has context, right? So we tapped into the point of control. The market continued to fall down. We broke through these lows right here. I wait for the pullback, right? Once we break through those lows, I wait for a little minor pullback. We got that pullback. I want to enter when we start dropping again. That's what I did, aiming for another form of liquidity, which I could have held this trade. You feel me? Like somewhere down here when the gap got filled, because I knew the gap was going to get filled. But it's cool. Take your profits where it's, the best works for you. The other trade, same exact thing basically, right? It's just building on the same trade I just took. Sweep of liquidity, point of control, break a structure. We ended up breaking through this structure right here. As you can see, I told you I wait for a little minor pullback. Once we have a huge candle like these, and I want to give y'all a secret. Once we have a candle like this where we just running through something like that, more than likely we're gonna have these little small little wick pullbacks. We're not gonna have a full retracement back into this range like that. If we do something like that after having this huge drop, that sell off is like disrespected. You get what I'm saying? So we're not gonna retrace back up here, because if sellers are in, they want to continue. So once we get a candle like this, we probably have like two, like the most I'd say we have like 3 of these. And then we start dropping again. I'm going to enter when we get past this low right here, right? So once we get like somewhere down here where I see actual selling pressure, same thing. Stop above these, above that high again, that breaker structure, and then this one I hold to the bottom of the range. And those were my 2 trades, and it's that simple. Building context, using volume to find my levels, waiting for a breaker structure, and entering. That simple. And I do this every single day, right? You can ask my students and my in the Discord server, which I'm giving y'all this for free, but they know I do this every single day. It's the same thing. It's the same concept, same mindset, going into trading every day with the same mindset. And that's where a lot of people mess up, right? Because they feel like, oh, since they are losing, they have to change something. No, you already know what you need to do. You just need to execute that every single day more, right? Stop trying to change and trying to cram information in your head when that's going to cause more noise. All you need to do is continue doing what already worked. If something worked for you, then let it play out, right? Stop taking out early wins and stuff like that. Let the trades play. Let everything play out. That's all you got to do. Keep doing. Be consistent. Be a consistent winner. Figure out what works, right? Figure out what works. Use that over and over again, and you will consistently win. Go into the market with no emotions, and I promise you, you will be a better trader. But hopefully, this helps, man. I didn't mean to make this a 30-minute long lecture, but hopefully this helps. God loves y'all, boys. Catch y'all in the video. Peace out.